I've been trading for over 8 years now. And trust me when I say this, I have lost a lot of money in this business because at that time, I just didn't know what I was doing. I would stay all night watching these YouTube gurus in hopes of finding a holy grail that works with a 95 or 100% win rate. But then I started to notice one thing. The more I kept my strategy simple, the more I saw the results. And that's the reality of trading. When you start overcomplicating your trading, when you start to combine all these concepts together, you fall into this thing called analysis paralysis. And when you fall into that, that's when the downfall starts and you're never going to recover from it. Okay. Now, trust me when I say this, I have passed multiple accounts challenges, prop firm challenges, but then in the past, I would pass my challenge and then blow that account the very next day because simply I just got lucky, right? And I was just over analyzing everything. I thought that maybe if I look at the higher time frame, let's say the daily time frame, maybe my win rate will skyrocket. But when you are trading on the 1 minute time frame, you do not need that. All you need is one candle to tell you the direction, okay? And that's exactly what I'm about to teach you in this video. In this video, I'm going to be teaching you a mechanical and repeatable trading strategy, okay? This requires no daily bias or higher time frame analysis and very simple, no overthinking, and the rules are easy to follow. So even if you are a beginner, you can follow this strategy and see the results by yourself. So what we're going to do is, first of all, what we need is go onto the hourly time frame. Okay. Once you go to the hourly time frame, you want to keep an eye on this one specific candle that forms. And this candle, ladies and gentlemen, forms at 8 a.m. New York time. Okay. This hourly candle, this 8 a.m. hourly candle is going to tell you each and everything, guys. Trust me when I say this. Okay. Now, a lot of people, what they would do is they would be looking at different things, right? Looking at the 4-hour structure, seeing, are we bearish or bullish? They would be looking at the daily time frame. If this fair value gap is getting respected, maybe we'll go to this high. But in reality, you don't need anything other than this, what I'm about to teach you right now, because let's be honest here, if you are trading on the 1 minute time frame, you do not need daily bias, okay? You can scalp out profits even if your bias is not clear or you don't have a bias. So this is the 8 a.m. 1 hour candle. So simply what you want to do, as soon as this candle closes, you want to mark out the high of this candle and the low of this candle. Okay. Now, once you have marked out the high and low on the 1 hour time frame, what you have to do is then also mark out PD arrays or key levels above the high of the 8 a.m. candle and below the low of the 8 a.m. candle. So let's say this is the 8 a.m. high, and on the hourly time frame, we have another high resting around here, a swing high on the 1 hour time frame. So what you want to do is also mark out this high as well. And let's say that there is a fair value gap just below the 8 a.m. low. So this is the 8 a.m. low, and we have a bullish fair value gap. Now, after 8 a.m. candle has closed, at 9 a.m. the new hourly candle is going to open just like that. Okay. Now what you want to do is, once you have marked out your levels, you want to drop down to 1 minute time frame. This is all you're doing. You're dropping down to 1 minute time frame after this. So what you have to look for is, let's say the next candle opens here. You're waiting for price to either sweep out the 8 a.m. candle high or the 8 a.m. candle low. So let's say in this example, the 8 a.m. candle high is taken out. Then the next step is that you also have to wait for price to take out the 8 a.m. The swing high that we marked out previously. Okay. So now if I zoom in, you can see that we have taken out the 8 a.m. candle high, and also you can see that we have taken out the swing high that we marked out. Now from here onwards, the things get very simple. All you have to do is look for a market structure shift on the 1 minute time frame. Okay. Once you have the market structure shift, you can take an aggressive entry. Okay. You can take an entry from a retracement back into a key level on the 1 minute, and then you can target the 8 a.m. low. Or if you want to be a bit safer, what you can do is wait for price to close back below the 8 a.m. high. And then you can take your entry at the retest, and then you can target the 8 a.m. low. Okay. Now, one key thing that I like to use with this strategy is look for SMT divergence on the 1 minute after the 8 a.m. candle is swept. So if we get SMT, what is SMT? If NQ is making a higher high, higher low, higher high, but on the same time, ES is failing to do so, right? let's just move it like this. Okay. The ES is failing to do so, then that is your SMT divergence. And then again, you look for a market structure shift and then you take your entry. It's really that simple. And similarly, vice versa, if we had, let's say, let's just remove all of this and let me tell you what I mean by this. So also let's just invert it back. So instead of like price taking out the 8 AM high and the swing high over here, price can open on the 1 minute, it can go down. It can tap into this hourly fair value gap and also take out the 8 AM low. And then from here onwards, what you can do is look for a market structure shift. So over here, we get a market structure shift, and then you can basically take your entry from a breaker block, right? And usually I go for breaker block entries because they give me the best risk reward, and also they let me in the trade, and I don't want to miss out on a trade if I'm seeing this setup. And then I take a long position, and then I target the 8 AM high. Once you take your entry, here, you're putting your stop below the low and you're letting the probabilities play out. You're not going break even. You're just sitting, right, closing your charts and then just going away somewhere. So you don't even think about this trade. You sit, you set and forget. That's the strategy, guys. And in the long run, guys, trust me when I say this, in a long period of time, like in a month, 30 days, right, your equity curve is going to look something like this. Okay, let's be realistic here because I want to set your expectations right. It's going to have some dips. It's going to go up. It's going to have some dips like this. Let's do even this. And then you're going to have this. Okay, so it's going to be a steady curve to the upside, right? This is a realistic graph, guys. Trust me. Okay, but you are going to see profitability with this model, guys, because trust me, there's no strategy out there that's going to give you like 80%, 90% win rate with 1 to 3 or even 1 to 2 risk reward. Yeah, sure, with 1 to 1 you can get up to 70, 80% win rate, but this is the model, guys. And for this strategy, some days you're going to make 1 to 6, 1 to 7 risk reward ratio, and some days it's going to be 1 to 2. So you can basically pass your prop from challenges and everything, guys, because in a moment, I'm going to give you guys a lot of examples for this strategy. But the thing is, guys, this is real trading, okay? You need to have a small edge in order to make money from these markets. And all these 8 years that I've been trading for, I've just struggled so much. And I don't want you to struggle as well, because I would just watch every single guru out there and they would be like over analyzing everything, right? And I was like, maybe I'm doing something wrong. Maybe I need to check the weekly time frame. Imagine checking a weekly time frame just so you can take a trade on the 1 minute time frame. Does that make any sense to you? No. All you need is one algorithmic trading strategy that repeats itself every single day. It's not going to win every single day, but in the long run, right, in a week or like in 30 days, you're going to see your equity curve going up. So let me give you guys some examples and then I'll end the video. All right, guys, so here is example number 1. I'm looking at MNQ or NQ, and this happened today. It is NFP today, and this happened and I was watching it and I took the trade as well. And let's go here and let's see what's happening. So we have the 8 AM candle, right? So first thing first, it has closed. So we want to mark out the 8 AM high and the 8 AM low. Then above the 8 AM high, see if we are inside a PD array. Now notice one thing here. We have already swept this high, so this high is not valid. We go back here and we have a fair value gap. Okay, so this fair value gap, the price is still inside the fair value gap, right? And also we have this volume imbalance that you could say, or an auto block over here. So that is your PD array or a key level, right? Now below this low, it is very unlikely the price will go down and take out this 8 AM low because we are so far up. And below this level, we have this low over here. So now let's drop down to 1 minute time frame. Okay, so let's go here. We are inside the hourly fair value gap. This is the 8 AM high. So let's see what happens. And if I play this through, price goes down, and then notice what happened. We took out the 8 AM high, right? And right after that, what we do is we look for a market structure shift. So we have a market structure shift. Now you can do two things. First thing first, we're coming from a hourly fair value gap. We have swept the 8 AM high, market structure shift, bam. Now where should you take your entry? It's simple. You can either use an auto block here, or you can use the extreme fair value gap right here. So you would set a sell limit order here, put your stop right above the high, and then you would target the 8 a.m. low. And let's see how this plays out. This would give you 125 RR. Bam, just like that, full TP hit. And this is algorithm, guys, okay? It repeats itself almost every single day. So let me give you guys another example. All right, guys, here is example number 2. And this happened recently as well. As I said before, it almost happens every single day. So now we have the 8 a.m. candle. So what you want to do is on the hourly time frame, mark out the high and the low of that candle. Now above this level, what you can see is that we are already inside the fair value gap. So we don't need to mark any key levels except this high over here. And below that, what we have is this low and we have this low over here, right? And then we have the 8 a.m. So let me just mark this out with real quick with red line, right? And let's just mark this out with green line so it doesn't confuse you. This is the high, this is the low, and then we have the PD arrays. So now let's drop down to 1 minute time frame. Low and the high. So price takes out the 8 a.m. low. And notice that we had a market structure shift here, but since we haven't taken out the key level as well, we just wait and sit on our hands. And just like that, guys, look what happened. We took out this low over here, and price has not closed back above the range. We could have also taken this inversion setup, and that's exactly what I took the other day. But to play it more safe, you would have waited for price to close back above this range, right? And then you could have taken your entry on the retest, or yeah, just like that. You can see how price reacted here. Now, if you took your entry here, you could put your stop below this inversion level. That is your safety net. And then you could have went for 1 to 2 risk to reward. This is 1 to 2 is like the minimum for the strategy. Okay. If you're getting less than 1 to 2, then it's not even worth it to take a trade. Now, around the high of the 8 a.m., we were getting 1.48 RR, right? So I would just risk it a bit more and let the trade running for some time. And at least I want 1 to 2. Now, in this scenario, when we hit the 8 a.m. high and we still are not getting 1 to 2, then I would go break even, okay? Because then that would be dumb to hold the risk. And as you can see, price went up. And although if you also took like this inversion setup like I did, you would have taken an entry here, put your stop below this low, and then it would have easily given you decent risk to reward, 2.5 RR. Let's move on to the next example. All right, guys, here's the last example. And as you can see, we have the 8 a.m. candle. So what you want to do is mark out the high and the low of this candle, right? And then let's just go here and make it red. Then what you can see is that right now we are already inside a fair value gap on the hourly time frame right here, right? So you can do, of course, mark out this low. But if we sweep the 8 a.m. low, we can look for longs, right? And then above this level, we have this high, right? So let's mark it out with black line, the key levels, right? Just like that, we have the high and the low. Then let's drop down to 1 minute time frame. And we have the low marked out. We are already inside a fair value gap, right? So let's see what happens. Okay, now we have taken out the 8 a.m. low, so we can look for longs because we're already inside an hourly fair value gap, right? So now you can look for a market structure shift. And just like that, we have a break above this high. So now you have this fair value gap is already filled, right? So this would have been your entry after the close right here. You would take your entry here. You would put your stop below the low here, right? And then you would target the 8 a.m. high. And this would give you almost 1 to 3 RR. So let's see how this plays out. Okay, full TP hit. Okay, it did go into some drawdown, but then our stop loss were protected right below this low, and that was it.